And I think the other way to think about the Treasury companies is if you look at Michael Saylor's thought process, it actually applies to all the companies with large cash reserves, which is he was thinking about the inflation rate being high compared to the interest rate at that time during COVID. Now the interest rate's a little higher, but I think realistically with the amount of M2 monetary expansion, even though the inflation rates are supposedly down, we're going to see financial repression, i.e. inflation rates way above the prime rates. And so for anybody with cash or US treasuries, they're literally losing 5 to 10% a year. And so, all of the companies with cash reserve have a fiduciary duty to preserve shareholder value, and they're failing at that if they're not holding on to that cash reserve value. And effectively, over the last decade, nothing has outperformed Bitcoin. So I think in a way, the treasury companies adopting Bitcoin as part of their treasury are also using the idea that Bitcoin is effectively the hurdle rate. If you can't outperform Bitcoin, you should at least hold some of it. And in the long run, once Bitcoin is fully adopted, of course, it won't be growing as fast because it'll be saturated. But I think it brings a prospect that Bitcoin is the hurdle rate, and you need to outperform Bitcoin slightly as an operating company. Using profits to buy more Bitcoin, using that as your cash reserve in the far future. But I think in the meantime, it's effectively all the people vying to accumulate more Bitcoin via whatever means, individuals, maybe selling some investment and buying Bitcoin or borrowing some against something that's unmortgaged, something low risk to accumulate a bit more Bitcoin, is all kind of an arbitrage to accumulate Bitcoin before it gets out of reach. So I think the treasury companies are using the corporate vehicle, corporate structures they have, the bonds, the converts, etc., to use that, beneficial access to capital from being a public company to do that same arbitrage. And so I think, the scalability of that arbitrage is enormous because you're talking about, Hal Finney's 200 trillion addressable market of extracting the monetary premium from all different types of assets, real estate, bonds, stock market. So I think that's the arbitrage, and I think it's really scalable. So, even if Berkshire Hathaway, Apple, Microsoft, put a sizable proportion of their cash reserves into it, it's not going to make a dent. It's just because it's such a big arbitrage, right? And I think the other question which you touched on is, what is the fundamental? Does it make sense for a company to have a premium? How should we think about it? And by, dabbling in those markets, I was relatively early in MicroStrategy because I wanted to support what they were doing in bringing Bitcoin to the corporate world. Came to view it that the
you mean you were an investor in that project?
Yeah, I mean, once they started in the Bitcoin track, I was like, let me buy a little bit of that and try to help them in a tiny way, right? And talk to them and think about it, how it's working, because I thought their mission to introduce Bitcoin to the treasury use case was a useful add-on for Bitcoin as an asset. And so I think the way to think about that is if you are, by the time Bitcoin is fully adopted, the MNAV will be 1 or not much above it, right? Just because it's not, the big upside is because prices appreciate quickly. And so if you buy a stock, MicroStrategy is an example, at 2 times MNAV, it might be a little lower now, but that's the number. Your risk is that it drops to 1 while you're holding it, unless it manages to increase the Bitcoin per share by 2 times. That takes the risk away, and then the rest before Bitcoin's fully adopted is your upside. And so you want to think about, well, what are the chances of them doing that? And so you look backwards, because that's all you have, and say, well, how much did they accumulate? So if you look back to January 2024 to today, they in fact doubled the Bitcoin per share during that period alone, right? So if you say, well, full Bitcoin adoption is more than 2 years away, then you have very strong execution. They're always doing some action to bring more money in and bringing new products, the preferreds. There's always something new, right? So the execution record is good, and that makes me feel the risk is relatively low if you buy it 2 times because they got a track record of doing that in a relatively short period of time. If you compare that to any other investment, say as an individual, like, okay, well, I'll try and buy an apartment and rent it out as an investment, you'd be looking at it like, the cost is 100,000, and how many years until the rent will pay for that investment, will pay for itself. And it's going to be like 15, 20 years, right? And here you have an arbitrage opportunity that's paying for itself, even on a Bitcoin basis, because a Bitcoin basis investment in 18 months, something like that, right? So it's actually, it's more of the Bitcoin Sharpe ratio outlier. So that's why I was saying it's like the arbitrage of the century or something, and why, even though it's hot, and some of them are commanding high MNAVs, if you look at the speed of accumulation of Bitcoin per share, you want to compare those and try and figure out the risk-adjusted view of that. But I think it is a sustainable model. Now, of course, things, the dynamic of that change through bear markets and stuff, right? So it's hotter in a bull market, clearly. But some of the instruments work in a bear market as well, like these perpetual preferreds. And a lot of, some of the companies have very low or literally no debt, in fact. So, you want to keep these things in mind. And I do think they have a little bit of capability, if their MNAV went below 1, to buy back their own shares profitably too. And of course, if people see that they might buy back their own shares, they'll try and get in front of that and buy them if they're getting cheap,